Thank you for joining me for a look at a chart that could be moving markets over the course of the next few weeks. Now, I know we always hear it's dangerous to believe this time is different, but this chart indicates it really is different this time. This is a chart of analyst revisions to their estimates for the earnings per share of the S&P 500. And it shows that between December 20th and January 11th, estimates have risen by 2.2%. Now we have 23 years of data in the chart. We have only 6 years when analysts have revised their earnings at this time of year. And the reason they're doing that is tax reform. Tax reform is having a big impact on earnings. It is unprecedented. We've had one other instance of tax reform. That was in 1986 in recent market history. And stocks rallied 40% before and 40% after reform was signed. We're right on target for that type of a market. Earnings estimates confirming now that tax reform is significant. This is how significant we see the change. Earnings estimates have risen from about 146 a share to more than 150 a share. That alone boosts price targets on the market by more than 2.2%. Assuming that we also get an earnings multiple expansion, we have even higher targets on the markets. And higher earnings multiples are justified since we do have a different operating environment for companies post-tax reform. Bottom line, this market can continue moving higher. We've already seen earnings estimates up, which is unusual for this time of year. Usually analysts are lowering their outlooks, but just 40% of analysts had confirmed or revised their estimates since December 20th. 60% are still taking a look at what the tax law means. We should expect more revisions. Right now, the trend shows we should expect higher revisions. Higher earnings will result in higher stock prices. So remain bullish for now. That's all I have. Thanks for joining me.